when you're in the room and it's like, this is a VC and these are a bunch of founders, there's like almost too much power given to the investor. When the reality is, if the investor does not make investments, they are not doing their job and they are failing.
Hey friends, this is Podcast Ruined by Software Engineer. I'm Perry Tiu, and on this episode I get to talk to Dana Oshiro, general partner at Heavybit. Heavybit is an accelerator turned venture capital fund, investing in companies focused on building developer tools. Their portfolio contains names you may recognize such as PagerDuty, Stripe, Netlify, and many more. If you enjoy Podcast Ruined by Software Engineer, don't forget to hit the follow button on your podcast app so you don't miss out on the new episodes. And you can pick up podcast merch at perrytiu.com/shop. Enjoy the episode. Welcome back to another episode of Podcast Ruined by Software Engineer. I'm your host, Perry, and today with me is Dana Oshiro, general partner at Heavybit. Dana, how are you?
I'm good. How are you?
I'm doing well, thank you. Needless to say, I'm absolutely excited to have you on the show because the topic of venture capital, of course, I name drop it here and there on the show, but never gotten the chance so far to dive deeper into it and understand maybe behind the scenes. And the fact that you live and breathe this topic at Heavybit on basically a daily basis, this can't be more perfect. So, extremely excited to have you on the show. But to kick us off, really, could you give us maybe like a 30-second blurb of who is Dana?
So I'm a Canadian. I've done jobs in journalism, in community marketing, and now I've spent the last 10 years in VC, helping dev tool companies build communities.
Yeah, 10 years in VCs. I'm sure you have like 4,000 million stories out of it. But one thing I do want to hear
Yeah.
real quickly, though, is nobody really knows the path against a VC, but maybe from your perspective is how'd you go from, I guess, non-profit marketing and then to journalism and then into, I guess, VC, but also specifically developer tools, which is a big domain that you guys are looking into currently right now.
Yeah. So it was kind of like a circuitous route for me. I always wanted to be like a writer and a storyteller. And, I think that there is this opportunity to take those skills that you learn and apply them to marketing something against a cause. And that was like really important for me. And so it's not actually that different thinking about like advocating for a nonprofit versus helping advocate for a dev tool company. I guess the connection there is you kind of start building up these like large movements of people, and that's pretty important. Um, and the whole thing behind it is if you are driven by a cause that you really believe in, whether that is, you know, curing breast cancer or whether it is like looking at homelessness services and wanting more of them versus like Jamstack or things like that, it's kind of like at the core of your being, you believe that there is a better way of doing things. There is some kind of change that needs to happen. And then you realize, well, I need more than just me to believe that. And so you kind of try to build up large groups of, early advocates, large groups of early developers that might like be very, very interested in kicking the tires on a product that is pretty early, but it'll get better.
No, for sure. I really do like the word advocate because there's something behind it about like amplifying voices and like amplifying like the content of whatever people are trying to make, whether it's a great cause of fundraising or like nonprofits to the point of people just smaller teams building tools to help other tools. There's always this content you're able to amplify, and I can definitely understand the link between marketing, journalism, and to developer tools at the end.
Yeah.
One thing that I'm always curious about people that currently work in the VC world and everything is, did you always want to be a VC? And also, am I using it correctly? Can I call somebody a VC to begin with? I feel like it's like a two-part question, but I know I'll be saying the word a VC here and there. But maybe the first part is VC. What does that mean? Am I using it correctly? The term, and also, did you always want to be a VC?
So what is a VC is like what is a venture fund is technically like a legal entity, and then the general partners like sort of well, they are the managers of that legal entity and the thing that the money passes through, right? So you can call somebody a VC, an investor, and sometimes a partner, but that's like an actual technical title. But they're all kind of synonymous with each other. So nobody's going to really blink twice or think you're weird for saying that. Um, I did not always want to be a VC, which is probably why my background is pretty varied. I only really started investing in the last 2 years, but I worked with this VC firm, Heavybit, for the last 10. And prior to being an investor, I managed Heavybit's operations team and our events and our content and our community and launched our library and all that kind of stuff. Um, for me now, I think this is the only kind of VC that I want to be and can be. I can't imagine spending 10 years with dev tool companies and sort of these technical startups and then applying that to some other type of work. Like, who am I to judge healthcare startups, you know? So I think, yeah, for me, this is where I've kind of landed. I think part of the cause behind that for me is that like software permeates our lives. Obviously, our work and our lives are like you just are using every type of software. There's so many applications that we're currently using right now, even just to record this podcast. And I'm working with the people at the foundations of that software and very early on in their journey. So it's very exciting.
Yeah, I like how you share your story because not everybody gets into the VC world the same way. And the fact that you're talking about there's a lot of strong keywords, community and the people building stuff, the foundation blocks for other people. That's very, you have one of the toughest crowd in the market. Developers are definitely one of the toughest crowd of
Yeah.
people. I'm one at the end of the day, and it's I can't wait to maybe ask you more about that in just a second about how do you cater to helping developers. But really quickly back into this keyword that I was mentioning, like community and like storytelling. Like you've worked a lot into it, not only from the marketing side, but the journalism side and now the VC side of helping so many people. So why is community, I guess, like important in nonprofits, but also developer tool companies?
Yeah. I mean, I think community is important for a couple of different reasons, but like tactically, for nonprofit organizations and for developer tool companies, both require a larger global narrative, right? Like you're playing into a big mission, and that's not just about the direct organization. There's a lot of grassroots marketing that is required. And then you depend on a passionate community of volunteers and advocates who are patient with you to help bring you along. There's this underlying mission about a better way to work or live, right? And so you want to give people basically what they deserve.
Yeah, and we all deserve the world at the end. No, just kidding. um,
Well, you deserve better tooling, right? Like when things change, like there are major technological or changes that happen. Uh, you don't want to still be using the old tooling for that. That is like a burden. That is sadness, right?
Absolutely. And one of the example, at least from like the developer side, is hot reloading. Whenever you make a change and your app doesn't change, you have to like close your app and reload it and then everything loads. That's one example that I do know that over the years of working in software engineering, it's improvements like those that make developers' lives so much easier because we don't actually have to close the app and reopen it every time we develop on it. Just a random tangent example. um,
I look at stuff like, I mean, not that in particular, but I look at stuff like that all the time.
you're the perfect person to talk to if I'm a geek and I'm talking to somebody, you're like the ideal person because you have seen so many sides of like the techie world and how we actually try to build new things just because you're helping so many founders do it. But yeah, coming off of talking about these community of developers, community of people that are trying to make foundational changes, is community important to the VC world?
Yeah, it is. So, I mean, first off, you have a community of portfolio companies, right? And you need to have a good community of people who can send you new companies. If you only have the same small group of like five people, they're not going to, you're not going to do a lot of investments or see a lot of cool things that are happening. And I think you have to like sort of stay on the pulse of what trends are happening. But beyond that, there's a community of LPs, which are the people that give funding to us, the endowments, the foundations, the pension funds that you have to stay in contact with. The general partners need to make investments and continue to be good board advisors, and you have to create a community of others who you can share learnings with around that. And then additional mentors. In our case, like Heavybit layers in, we built up a kind of mentorship community of about 600 advisors who are all dev tool and infrastructure domain experts. And so those folks also help support our founders. But like, at the core of it, you need to build a community of founders who trust you and who are willing to refer you and believe that you've done good work and earned your keep on their cap table. So yeah, community is very important. I think word of mouth in this industry makes or breaks you.
Yeah, you definitely took the second to expand my horizon in the sense of whenever I thought of the word community in developers, always like the builders and the people using the tools, but everything else that you listed on top of that is part of that community. Everybody that is the endowment funds manager that also work closely with you and everybody else that depends on that. It's so fascinating to hear from your perspective. This is the part I really want to dive into when we talk about Heavybit, because just for context, real quickly, Heavybit, it's a fund that invests into developer tools, and there are household names that I just keep on coming across, and Heavybit is part of it. I could always throw like Circle CI and like Contentful and like even a bit of Stripe and Netlify. The people that do tech out there know these names at the end of the day. But one thing that is great to hear from your perspective, being I guess like at Heavybit, is what do you slash Heavybit look for in companies in general? We already talked about a little bit about developer tools, but maybe you could expand a bit more about that.
Yeah. So I'm often investing in really, really early stage companies. So, it is by and large technical founders. Specifically, I'm writing pre-seed to Series A checks into these companies. Their developer tool and infrastructure. We look for a team that really knows the problem area and audience. So in that case, like if you are building a DevOps tool, you better have worked in DevOps and know a DevOps audience or have some kind of influence there. And in some cases, you're already like influential in your field, and so there's a built-in audience for your startup, even though there's not a product yet to deliver, right? So one of the people that we invested in was this woman named Nora Jones, who wrote the O'Reilly book on chaos engineering and systems resiliency. And she worked in chaos engineering at Netflix and at Slack and at Jet. And then she ended up building a company that was recently acquired, specifically around postmortems and like sort of these blameless postmortem reports. Um, she is brilliant already. She is successful already, but she decided to start a startup, um, you know, specifically to solve a problem for the people who weren't Netflix or Slack who couldn't afford these types of systems for themselves. Um, you do not have to be that famous, but that is like a neat, you know, you see that founder come to you and want support, and you're like, yes, this, what is this? Take my money, please.
Or maybe you could be famous too, why not? But I think like one thing I am absolutely jealous is you have front row seats of these stories. I don't know, I'm always curious about this, but solo founders and non-solo founders, like the companies that you look into, what is the most common? Do you majorly see just solo technical founders looking for funding, or do you all see them usually like more than a couple, two, three, or they already have a team with them of like 12 people?
Yeah, I usually see companies of like, it generally looks like two founders. One that is like super technical and wants to work on the product roadmap and with the engineering team, and then one that takes all of the go-to-market things, but they're still technical too, right? Like it might be a very senior leader at AWS or Amazon or at Microsoft or like it's just somebody who's like the engineer that's the people person that often ends up being the CEO because they're the person that has to sell to the early customers, frankly, to the large customers, and then recruit everybody that's coming in on the go to market side. I'd say like 2 to 5 person teams. Might not be five founders, but it's five very, they're all technical.
No, that's such a good perspective because it's always a daunting. It sounds very daunting whenever you think about the scenario where it's like, but what if I'm like a solo founder? What if I only have a co-founder with me? And people think that you need like a team of 36 people before you can get your first round of funding. But I think the dream is very much more accessible than people think about it.
Yeah, I mean, so solo is we see it, and we definitely invest in solo founders, but like it's a hard, it's hard, right? Like you need to be in it for the long haul. Um, so you need to be able to talk to somebody honestly, and we find that like two people means that it's not just you in a vacuum, like toiling away, right?
One thing that is interesting about Heavybit, and also just the world in VC funding, there's a term that I hear once in a while. It says the investment thesis of a VC, or like what do VCs mean by their investment thesis?
Yeah. Um, I think people don't realize that VCs are not like it's not just like I have $100 million just sitting here and I'm like some rich fancy person that's like doling it out, right? Like I do put money into our fund, but there's also a number of people that are investing in our fund as well. And we make an agreement to them that we are investing at a specific stage, on a specific model, and in some cases, but not ours, like in a specific geography. And so, this is basically for us. Our investment thesis is the category we invest in is dev tools and infrastructure. The stage is very early stage, like 2 to 5 people, all the way to Series A, and we invest globally. It is mostly technical products for technical teams, and we're often the first like check in.
Gotcha. So it's a good, I guess, like summary in terms of like the shape of your fund, the type of your fund, and it's something that's meant to be very public, right? It's not something that you're hiding behind the scenes to be like, no, it's only our secret investment thesis. It's something that you're like, this is us, and this is our, I guess, investment thesis.
Yeah.
That's so cool. Such a fun topic to think about. About Heavybit specifically, though, why do people take your check versus someone else's? Just because we know the world of VC has been growing year over year over year for the past what? So why do people take fund from Heavybit as opposed to others?
Yeah. I mean, I think uh, maybe not this year, but in previous years, there's a lot of people with money, right? Like, and money isn't a differentiator. So you have to think about who is going to help you build the business today and who actually has like unique domain expertise and access to the type of customers that you might want to talk to. So most of our founders take money from us because they are technical engineering and product leaders who need support in other areas of the business. But they like us because we have, in many cases, across our partnership, done engineering leadership and product leadership jobs, right? So it's not, you realize when you start a startup that it's not just about managing an engineering team. That is like not the same thing. It is about being the CEO of an entire startup and a business. So for us, our partners act as advisors to our companies, and all of our partners actually work on every company that we invest in. So we only do 10 to 12 companies a year. There's five of us, and the other partners include the founders of Heroku, Chef, Librato, and then we've got a managing director who manages all the investments. Um, Manages all the investor relations, so the foundation work. Um, for me, I often fill in the gaps on go to market. So at this point now, like I work day to day on talking through with founders through their like marketing strategy, sales, their pricing, their operations. But I've probably now gotten a chance to work with founders on like 50 plus commercial GA launches. So it's a lot, but I think for us, our differentiator is we want to actually get involved in the business and work very closely with our founders. And I mean, people also want to work with us because they look at our portfolio and all of those advisors and they're like, I'm not just getting one partner, I'm getting a bunch of people who are all very domain specific.
Yeah, definitely a couple of highlights that you mentioned over there is, of course, the domain knowledge, right? The domain specific knowledge industry knowledge that's super, super valuable. But the other super big emphasis is mentoring, advisory, anything that is helping somebody to grow into a path. Just because, I mean, it's a concept. People who go to school have school advisors, but why can't you do it with life and startups and everything like that? So I guess that emphasis on that and how much you sound like you put so much effort and it's so valuable to do it is not apparent for many people on the other side. Like I could be a founder coming in to be like, everybody has money. Like, why are you so special? But then hearing the difference of what can people help, like the influences and the relationships and maybe partnerships between companies. Those are always stuff that are super valuable when we talk about why take somebody's money versus other people's money.
Yeah,
Fascinating.
I mean, I would like if you're a founder and you are raising money, I would 100% go and find a portfolio company that has taken money from that investor and get a kind of back channel, right? Like you want to know that you're bringing somebody onto your board that you can trust, and that is actually going to be very helpful. You don't really want to be in this kind of like money munging machine.
Yeah, and also I really like the part where you're mentioning that like yeah, you're building like a full company and not just like a dev tool or like an engineering team. You're really building every aspect, the sales, the marketing, the public investor side to it. Like this is so fun. But it's kind of helped me think about in terms of like just stepping back from Heavybit just a second. This is more generic, but like there's different parties in this ecosystem, this community of VC and also the dev tools. So maybe a question for me would be what's the difference between an angel, a general partner, and a limited partner, which in short GP, LP, angels, what's the difference between those?
Yeah. So angels tend to be people who invest their own money, tend to be very early and they write smaller checks. Um, GPs, which is what I am, are part of a VC fund. So we have we put some of our own money into the investment, and also like there's a number of foundations and LPs that we're investing on behalf of, and we invest larger checks, and then finally like LPs are even bigger, and they invest in VC funds, right? So again, foundations, pension funds, university endowments, and like corporations like Salesforce Ventures might be an LP in a fund. Um, Basically, like if you've ever wondered, I think most people don't know about LPs very much, is that the one that was kind of the big question mark for you, or?
For me, definitely. Like even GP is like to some extent a bit mysterious to my world, but like angels, we hear that because angel is popularized a lot of like, hey, take people's
Yeah,
check. But LP is definitely the most extended one in the sense of limited partners. Like they're not. How are they publicly known? No, they don't really do like media marketing for themselves. Be like, we're the greatest LP in the
no.
world. Do you know what I mean? So I agree with you in the sense of LP is definitely a different beast of uncertainty and unknown world to me.
Yeah, they are professional investors that generally have like that are like hardcore finance people in many cases, and like super sophisticated. But basically, like if you've ever wondered where your college scholarship comes from or your retirement benefits might come from, it's likely being like topped up by VC money that is flowing back through the LP, right? Like the LP, their job is to ensure the survival and success of like the Yale Yale existing, having buildings, having scholarships, or Georgetown existing and having yeah buildings and scholarships, right? Like that's kind of where that money comes from.
I'm live making a connection between two things. You can tell me if this is correct or not. But let's say I'm from Canada. You're from Canada too. So you know there's a Canadian like retirement funds, and they take that money and they invest into like I don't know some Norwegian company and like some other companies. Would you consider that like Canadian investment pension fund kind of thing? I don't even know what's the correct term, but would that be like an LP technically, or am I not getting that right?
Uh, I mean, some LPs directly invest in like a Norwegian company or something like that, but it'd be more likely that they'd invest in a bunch of Canadian VC funds. Sometimes they do direct investments, like when companies get very, very big, they will take direct investment from an LP, but that's like when you're at the IPO stage, like that you're like no one has that kind of money, right? Um,
Gotcha. And from the government perspective, then, are government entities considered LPs, or is that a complete separate thing? Maybe this is the part where I genuinely have no idea.
Yeah, yeah, there's something there's an LP class called like sovereign wealth funds.
Right.
That is like anytime a country has a surplus, basically there's financial managers that go out and take that surplus and invest it to try to like basically make more money for what is like citizen services, infrastructure, things like that. So yeah, there's like there's sovereign wealth funds. I think I haven't invested in Canada, but my understanding of it is that there is a geographic tie, right? So if you're a VC, for instance, your LPs say that you have to invest a certain percentage of your fund into Canadian companies. And that's not the case for a lot of US stuff, like for a lot of other types of. LPs.
No, that's absolutely fascinating to me. Of course, one of the headlines that we see a lot is the Saudi fund that has like I don't know what 300 billion or something that they were like deploying all over the world or something like that. So that's kind of I really appreciate the connection I'm trying to make between all these because it's not easy for everybody to understand this. So that was really
Yeah.
really fun. Um, Going back to I guess like yeah, I still understand the high level bit of Angel, GP, and LP at the end. So if I guess like hypothetically I want to raise my first funding, there's these different options, I guess. Angel, GP, even LP as you're saying, but that's like very, very late stage. My general question here would be who do I talk to first if I am raising my first funding?
Yeah. It kind of depends on how much money you need. And the I think the main thing is like thinking about how much money you need. So you kind of have to chunk your product work, at least in dev tools and infrastructure, and your product work and your company building into 20-month increments, right? So um, if I over the next 20 months, I think I can get an MVP out the door, and I think I can get great adoption, and then maybe I'll raise my next round so that I can move on to the next stage and hire a bunch of marketers because I've proved out something on the product, right? Um, Sometimes for dev tool and product, those types of product companies, there's like a handful of angels who are enough to write 25K checks into your company and will sustain you for 20 months because usually it really is a team of 2 to probably 10 people at that stage. But sometimes you need more money. For instance, if you're doing something like in hardware, and so you might come to me for a different type of, like for that early check. I do write those early checks as well, but um, the reality is like we have this like fund that has all of these different services, all of these different um, experts and events, and like you got 20 months. You're supposed to put your head down and work on a product. You're not going to be able to take advantage of all of this immediately. Down the line, you will, but maybe taking like a small amount of money early on will help you prove it out, and then you'll be in a place where you're ready for hiring a marketer, for instance, or bringing in non-technical people.
Yeah, this launchpad phase where it's like, yeah, definitely the MVP phase and getting a product together. And even the fact that you called out hardware, this whole time I was thinking about, like, yeah, of course, software. The margins are great. You just like build stuff, people use it. But then, as you were saying, like, hardware is definitely a different beast. The molds, I'm assuming that you need to like build the items out. This is such a good contrast between what kind of, I guess, like, what kind of work you work with, what kind of companies you work with at the end of the day. Um, this number is great. This is something that I don't get to talk a lot about, but 20 months runway or 20 months like that, where does this number come from? I guess is it like a heavy bit thing or is it like a general industry thing? Just because the parallel I could talk about is, and we could talk about this number after, but like 8 years or like 8 to 10 years, that's another number that is very thrown around in the VC world just because it's about how long you would expect companies to go public or being acquired or XYZ kind of thing. So if we start with the first one, 20 months, it's so fascinating to me. What is, I guess, maybe the reason behind it, or where did it come from originally?
I think 20 months probably, well, at least for our stage, probably gives you a shot to make like two mistakes, let's say. Like you try to launch a thing, no one cares, right? So you like you basically go back to the drawing board, you do a lot more customer discovery, you come back out again with it, and then you can drive a bunch of early adoption. So, I mean, 20 months is 18 to 20 months, I think. 18 months was what people said in the years where it was a zero interest, where money was flowing and it was zany. I think 20 and even more is where we're at right now. Um, yeah, it's just about like think about when you are building a large product, like not even the company piece of it, but just you're trying to break down a system and you're looking at what sprints you need to do. And you it's manageable to think about building the sprints in a 20-month period of time. It is not very manageable to think about building a billion-dollar company from a pitch deck today. So, if somebody gives you like $100 million immediately today, Perry, and you're like, I want to build like a podcasting network or something, like the hell? Like, actually, that money feels like a burden versus if it's like chunked in a 20-month period of time, like this is what I think I can realistically get done in a 20-month period of time, or me and my team can get done in a 20-month period of time.
Yeah, I really like that, breaking down the bigger problem into small problems. And as you were saying, like the term of sprints, which people in tech kind of are familiar with, where it's like bite-sized project, the agile way of doing it. This is really cool. I also want to double click real quickly on this other number that I threw out there, 8 to 10 years, whatever, 7 to 10 years. And I've worked at different startups, and it's not that unrealistic that people have this dream, people as in like leadership and in startups, to be like, we could maybe go public in like 7 years old, 8 years old, 9 years old of the company. So could you share a bit more to people that hear about VC talk about these like number of years, maybe your take on what it means and how accurate it is today, this 8 to 10 years frame?
Yeah, I mean, I think especially from our stage of company, like you're starting pretty early, right? So there's a lot of those like 20-month sprints in between um, starting a company to IPO or like a late stage acquisition or something like that. So on the one hand, like it takes that long to build a company that is both like good on the product side and is like a money making machine, right? On the other side of it, there's like actually a legal agreement that we have with our funders that says that we have to manage this investment and the entire portfolio for usually a 10-year period of time, right? And so if you think about what happens over a 10-year period, like what if today the Perry startup is like on paper worth like $10 billion, and then there's like a huge economic issue or whatever. You don't necessarily always win just because you are successful today. I think there's like a real ephemeral aspect to it. Um, and then the other thing is like that your investor really it has to pay attention and has like a duty to pay attention to what's going on with your business over that period of time. So you better like them because you don't want it to feel like a scolding or somebody who really doesn't understand what you're trying to do, just hitting you over the head with some revenue metric without thinking about the fact that you basically just like refactored the entire back end of a product or something like that.
Yeah, because the this is such a good contrast. Because when we build tech, is so fast paced, right? We're like, you could do this at any moment, then you pivot, then it's like very in the flash kind of thing. But this, I guess, like this is this ephemeral part of overnight success. Of yeah, you build a company and within 2 years you're worth $4 billion and you exit. Like it's not accurate to what happens in real life, as we're seeing. It's that when you talk about these growth and these relationship is every founder that are successful today probably could share this, that their expectation is yeah, we were in it for the long run, we're in it for the long run of 7 8 10 years on that. There's another probably topic I'm probably not going to dive into this episode, but when we talk about QSBS and like the 5 year minimum of owning all the shares, and that's already like half the chunk of that company already, that's something that is fun to like compare the 5 years to 10 years. Anyways, that's probably for another time because I will lose the absolute like control of how much I want to talk about that. But either way,
Yeah.
this is actually fun part of the hypothetical story in terms of when I was talking about like, oh, I want to raise my first fund. Who do I talk to? Do I talk to angels? Do I talk to GPs, LPs, all that kind of fun stuff? Now that I've decided, let's say I want to talk to angels, I want to talk to funds even. How does one even get that meeting? I can't just wake up and just start calling somebody because I don't have the numbers. I don't know what happens. So hypothetical in this scenario, what does it look like? What's a modern way of reaching out to investors?
Yeah. I think like for us, we get a lot of emails. So a warm intro from a portfolio founder or a community mentor, which is having 600, that shouldn't be that hard to find somebody in there, is probably your best bet. Especially because like we already respect the abilities of the portfolio founder and the mentor. So if that person is like, this person is good, this is where they're going to be weak, like this is where you're going to need to help them or whatever, that's very interesting intel to have ahead of time. We also just see a lot of, I mean, be this is a rote answer, but like be good already. Like so, like be there's a couple of ways that that works out. So, in some cases, it's like you have a super popular open source project that is like quickly gaining momentum, and maybe you've done a bunch of different talks on like a new way to build, and people are really like stoked for you. Maybe you built something in-house at a company already, and that email is like feels a little different. But we also talk to a lot of people um, who just like send us an application, or who show up to our events and like just seem interesting and smart in the room. I think there's like a lot of ways to get that meeting, but honestly, if someone you know already knows that investor, like make them make that intro for you.
Yeah, I like the bit when you're talking even in person, like in New York at least. There's these like weekly events where you have like tech founders, and then there's like VCs who show up to them, and it's like it sounds obvious, but the thing is like if you ever do show up to them, I've been to a couple of those, and it's fascinating. You literally have people with the money, and you have people with the ideas, and it's like, oh look, that works. But good old emails also work. So hey guys, don't be shy to reach out to Heavybit. I'm sure they have a bunch of stuff that they could share with you.
Yeah, I mean, in that room, the weirdest thing in that room, because I've been, like post-pandemic, I was like dipping my toes into like what events are people supposed to go to now? What's like cool? Like I want to see some cool shit. And what I noticed is that there is a strange like dynamic, there- a different type of dynamic than one when you're just talking about your abilities or your beliefs in like different types of technology, and you're like fighting over, I don't know, whatever. It's like, I use this framework. But when you're in the room and it's like people are like, this is a VC and these are a bunch of founders, it seems like there's like almost too much power given to the investor. Um, when the reality is like if the investor does not make investments, they are not doing their job and they are failing, right? And so, uh, yeah, I think there could be a shift in the dynamic a little bit where the founders could be like, I have built something, people like it, like it is doing very, very well. Do you want do, do you want me to like give you the honor of being a part of this thing, or I could just go with somebody else who has similar operational experience or what, it is a strange like power dynamic that I don't always love.
Yeah, and I'm glad you called that out just because like even for me to experience it, well the thing is that's funny because it always depends on like how mature your product is, how big your product is, and like how much confidence you have behind your product and everything. But I go to these events with nothing. I'm just there to mingle and have fun. Well, I get dragged to those events once in a while. And it's so funny how when I literally just start talking to somebody, like they assume I'm selling something. I'm like, I genuinely have nothing to sell. Maybe if you want to be on my podcast, maybe that's one of the things. But aside from that, though, I'm there and I'm generally just absorbing all this. And as you're saying, like, yeah, this dynamic is very interesting. It grows even as the event goes on, where you kind of see like people that are whether they're like, oh, I came out of this like with something. I'm like, what? And then there's like VCs that are like, oh wait, we thought it was a different domain, and there was always these like different topics that come up. So for me, I'm just a sucker to hear on both sides and see that dynamic. And if you guys have any chance to go to one, please, please, please check it out. It's absolutely fun to just learn. Not to come out with a
Yeah,
$5 million check, just learn things. That's all I can say for that.
yeah,
um this part is kind of where I'm like imagine I'm a happy person. I managed to have a interview with like some fund, right? This is like it's in the calendars and I'm like I'm ready for this, but what do I walk in with? Like what do I prepare? I could literally Perry could bullshit maybe 6 minutes, but after 6 minutes like I don't know what else to say about my ideas. So maybe if you have anything that could help, I guess like what are some good things to highlight when raising your first funding, but even going to these meetings, like what should I be preparing and what should I be prepared to show after?
yeah. I mean, you don't necessarily have to have a deck when you walk into these meetings, but basically all the ideas inside of the deck you should have inside of your head. Um, I think like basically you could search pitch deck in heavybit.com/library, and we have like a long article with a template that you could like take a look at. But the main things are team. So have you solved the problem before? Are you passionate about it? And are you connected to who's going to be your first user? Um, the product and solution. So obviously, like, what are you solving and what are you trying to build against that? Like, what's your approach? The market, which is what is the size of the problem, and like, will people pay for it? Like, is it $1 billion problem? And then there's the other pieces that are more like pricing, how you're going to package it, how you're going to take it to market, and then traction, right? So show your momentum today and how you're going to build more traction with the money you're trying to raise for tomorrow. Um, and do not walk into that room not knowing how much you want to raise or how you're going to use that money. Because if you just need money because, like, I don't know, I need more ramen or something like that, that that is not like a compelling like success story to being a part of like venture capital.
Yeah, having a number walking in, that's always a fun thing because, yeah, you should have a number, but then the biggest insecurity, at least if I'm in the scenario of, hey, I want to raise whatever, how do I make up this number? How do I value myself? I feel like there is that insecurity for people that have a product and they're coming in, and then the venture capital would be like, if it was a dumb number, like stupid cheap number, they'll be like, "Yes, let's do this now." And you're like, "Wait, did I just mess that up?" Like, what is your experience seeing with so many different cases? Does that happen often where somebody either like comes with a really low number or like there's a misalignment in terms of what people are asking versus what investors are ready to help out with?
Yeah, I mean, I've seen low numbers. I've seen technical founders come in and try to raise like too little for their company, because they don't know what it's going to cost to hire the people that they need to hire. And I've seen technical founders come in and try to raise a boatload of money because they're not accounting for 20 months of growth. They're accounting for like way more than that. So really go back to the principle of, okay, 20 months. This is what I think we can achieve, or I think this is what I think is like a indication that our momentum is like that we're going in the right direction, and then work back from that. Who do I need to hire? What infrastructure costs do I have? You know, who am I? Like, that is basically what most of the costs are at that stage. Nowadays, I mean, probably 3 years ago, people were like, or 4 years ago, people were like, and then maybe like a small office or whatever. And now nobody does that, right? And so you kind of have to think about bundle up all your software costs, your hiring costs, and all of that over a 20-month period, and then think, is that actually going to get me to, this launch or this like major milestone? So that's kind of what the number is based on. So coming in and saying I want $100 million is like, how are you uh, like that places you already at a $3 billion post money valuation. Like, why is this a $3 billion thing right now? Like that's rough. There are some instances where like AI companies have raised a boatload of money immediately, but that is really like cost of GPU and all that.
Yeah, not as common outliers and maybe some great headlines more than anything. But all the keywords that you're throwing in there, like like the market, the pricing, the cost. Like actually, one thing that I actually learned as I grew in my career, in the sense of like being an engineer, like you build stuff, you don't really account for like how much your time is worth to the company and everything. I think about a lot of this because when you work. Very typical example, team of 6, 7, 8 engineers, and assuming Bay Area, whatever, like 150K an engineer, that's on the lower side anyways, that's $1 million every year that you spend on this one team of engineers. And when you break it down that way, or when you expand it that way, like it changes the way how you think about these costs, as you were saying. Like, oh yeah, if I want to build a team of like 5, 6, 7, 8 people, depending on where they are located, then you kind of just add up the cost. And if you want to divide it by months, so you have like this 1 month is going to cost me, I don't know, like 10 grand, 12 grand in like salary, and then you maybe times 20. That's what I'm learning from this conversation of like understanding that, hey, there is a cost to all this, and you can break it down. You can do your numbers at the end and just look at your own job, look at your own team, look at everybody around you. It works in that same kind of economics as teams evolve. It
Yeah.
wasn't a question, it was just something that I noticed, like the more I work in tech. That's kind of fun. um One thing that I'm just curious about this one because people do this sometimes. Do people walk in with no like users and no clients and no customers? Like, do people walk into these interviews without any actual like clients and everything? And do they bullshit it? Do they pretend they have clients? Do they fake any of this stuff? Like, this is more just maybe me assuming that it happens in industry, but maybe from your experience, what did you see about this stuff?
Uh, I mean, they could, but like, I guess the thing is that so much of our community and our found because our founders and our community is vouching for these folks, um, you know, you cannot outright lie. Like you actually have to give all of this data and stuff up front. So, like if you're like, okay, so like how many customers we're talking? And sometimes it's two customers, but those two customers are like kind of impressive and likely to expand. That's fine. Um, some people come in and are totally honest, like, or they should be totally honest. They don't. They have a deck. They have like a working like MVP prototype, and they have a couple of alpha users. But like that's the thing that happened in the case of like Nora Jones, who's the chaos engineering lady, right? She didn't have it all built out and she didn't have it all figured out. But okay, this woman has literally sold the book on this subject matter to thousands of people. She, still has like a info queue column and she speaks at SRECon and all this kind of stuff. Um, like, do I believe, at least from a go-to-market standpoint, that she's going to be able to reach an audience early? Yeah. Sometimes that fails and sometimes that succeeds, but like she has an unfair advantage over somebody that is coming in that has no connection to the audience or that has nothing built out.
Yeah, I really like the perspective just because it's more than just the number of customers. It's more than just the fact that, hey, you have already 5,000 users or whatever. There's so many factors behind it, the expertise and the reach and the potential behind a lot of these projects. So that's a great example.
Yeah, it's kind of like a video game where like somebody has like I'm super strength on influence and community building. I'm like I don't have this. Like it's just like you ratchet up the different strengths and abilities.
Yeah, and people want to buy those stats. Pay to win. That's the. No, I'm kidding. I'm kidding. This question it might be super relevant for you actually, because I talked to different founders, of course, and different people that work in tech, and some of the funny topic that is like we treat it as a joke, but when you work at big tech, they have a lot of internal tools that are fantastic. They're like, here's like a build environment that with preview links and everything, and then when they leave big tech, they have that in their brain. They kind of take it with them, and then they could maybe make something of it. Kind of like open source it. Take a really good tool that happens in these big tech that nobody really sees unless you work there, and then open it. So maybe your I guess like your perspective in terms of do you see that happen more often, where people just literally it's not a net new idea, but they've seen it within a company and they just take it out, or is there any kind of political like unwellness behind that? Like what does that landscape look like from your opinion? Just because like we take it kind of as a joke because you have people that spin these out of internal dev tools and they make it big just because they've worked at it, they kind of bring it out. So I this is a topic that I love hearing from you.
Yeah, I don't I mean I guess I do see that a fair amount, or I see people who have built a large in-house system, and then like take their learning from that and build it as a company. Um, listen, I think if the core business of the company that if you open source something that you built at a specific company and then spin it out and decide that you're going to build a company on top of that open source, like community and code, I think that's fine. Like we're starting to see some interesting stuff. Like I think Spotify spun out Backstage, for instance, or there's things like that. Um, yeah, I mean, I see that. I don't think there's anything wrong with it. Certainly, if you are one of the core contributors to an open source project, and you frankly control a lot of the governance of it, that is an advantage if you're then building a company on top of it, right? If you build a company on top of something open source, but you have no connection to the core contributors or the governance of that project, you have no idea if the underlying technology that you're dependent on is going to effectively wipe out your company. So I think that there's like, it's just like you don't build for one platform and then not know what's going on with that platform, right?
Yeah, this is such a great perspective. And for me to just kind of, I guess, the highlight that they build these tools internally because people need them, because people use them, and it kind of makes everybody's life better. And this is a random thing. I think there's a GitHub page out there where it shows you the mapping of like big tech. Like Google has like these internal like tools that they can use, and people started like making a mapping to like outsource project or like open source projects that are like directly equivalent. So if you need inspiration of looking anywhere, I could send you that link, and or maybe you've seen it before, if anything. But it's like literally a mapping of internal tools built at big tech, mapping to like open source project, or like somebody's gonna be like, oh, there's a hole there. Let me just like build that tool that kind of fits in that mapping, and it's so fun to
Yeah.
see
Yeah.
it.
It's not even just open source too, right? Like, I think Slack is the most, it's kind of an insane founder journey. So like the two co-founders first tried to build, they have tried to build a game. Like every time they're trying to build something, they're building a game. So those guys, they built a game and then had like the photo sharing component to it become like very popular. And the game wasn't going very well, and so they spun it out into Flickr. Then they tried to build a game again, and it didn't do very well. And but their internal like sort of company messaging system was like very good, and so they spun that out with the last like I don't know $2 million or something like that, and made Slack, right? And like it, it is a um, some of these folks are my friends, and so it is a joke that we're kind of like, when are you going to build the next game, right?
Yeah.
Um, you come to it from different angles, but like I don't know. I think at the core, at least in the types of investments that I make, everybody is has a very strong understanding of the type of product that they want to build, and also is good at building that product. Like probably they've built it in house. Yeah, one of my investments more recently is this company called Yeto, and they're about to like launch something big, but it's a support tooling company. And you wouldn't think that the world needs another like support tooling company, but they're the support engineers and the integrations people and the EVP of support at GitHub who are building a support company. And the CEO was the EVP of support at GitHub and built the internal tooling there. And they worked at Zapier together, they worked at Abstract together, they work at Plaid. Like these people know the problems of what a support person does, right? Like they have sat on that desk and people have shat on them, and they are figuring it out, and like behind the scenes they're like, I'm just trying to ask the engineering team why they've changed this to this, or why this integration works this way. Like why can I not get all the information that I need? So yeah, basically TLDR, feel the pain of your end user.
No, absolutely. It's noble and heroic, if anything. Like they have to deal with like intercom and doing all that kind of fun stuff too. I think like this is my equivalent of sometimes. Okay, this is completely tangent, and this is the last tangent I'll make before I ask the next question. But I keep on telling people that like you should pick a job go when you're at school and everything. It's a weird thing to say, but like pick a part-time job, go work at like American Eagle, which I did for like 3 years while I was doing university and everything. You get the direct feedback of customers and understanding the pain points they go through. And then nowadays I don't do any of that stuff, but there's so much decisions I've made throughout my career that it really depended on how the people would feel about this, how the user would feel about this, how would the support team handling this would feel like. And I always go back to the days where I was like, I'm selling jeans at American Eagle, or I'm a camp counselor in YMCA day camps. Like those are stuff that it seems irrelevant, but trust me, it really is a good opportunity. But anyways, speaking of advices and careers, though, I don't want to miss this chance to really ask you in the sense of what advice do you have for technical people, software engineers, technical product managers, anybody in that space, and they either want to become a VC at the end of the day or even be part of that VC world. Like what, I guess, suggestions, career advices, or anything like that that you could throw at us.
Yeah, I think like right now, while you're still in your engineering role or your product role, um, like be a joiner, like go to things, meet more people, right? Like talk to folks, because like the only really thing that matters about VC beyond like the support that you can offer to your portfolio is having a very big network to look at a lot of stuff. Um, and then that really is what I think what VC firms are looking for in a technical kind of hire or a technical partner. Um, that you have the network that you can unlock of like the new coolest companies and coolest founders, um, but that also that you can actually have a bullshit filter on whether or not something's going to work. How you do it is a lot of people like will become an angel investor via AngelList or something like that and try it out and see if they like doing this and meeting all those people. Um, and otherwise, you can go in-house to like a VC firm, and you can either join on the operations side as a platform engineer, or you can be kind of like on the junior investment team.
Yeah, those are all great paths that it's very inspirational more than anything. If people want to give that a shot, there is a chance to be out there. It's way more accessible. I'm not saying that most people think. Not saying that it's easy.
But like you're working with founders, right? You're not working with product. Like understand that. Like I think that's the thing is like you have to like people. Like this entire industry is built on people meeting people and saying that and agreeing that they're good or or agreeing that they're like fair, right? And so yeah, on the investment side, everybody is looking for people with a good sense of, with a good network, and a good eye for where technology is moving.
No, that's awesome. Per's gonna go and build an ELO system and just right now I'm kidding with all of that. But no, these are absolutely great advices just because I keep on saying that we don't always get to talk about these topics like this on this show. So that's why I just want to say thank you for sharing so much behind that. One thing I want to make sure as well is where can people either find you, your content? You do some media stuff, you do write, you're from a journalism background at the end, but also a heavy bit. What do you want to share with the people and what kind of links you want to share?
Yeah, I mean, I'm just Dana at heavybit.com. Like that's not a hard thing, but for Heavybit, we have a bunch of things. So if you go to heavybit.com and you'll see like there's a newsletter subscription, there's like a library where we release content all the time, and then we do events, primarily in San Francisco right now. But honestly, we travel to a fair number of conferences as well. And so for us, we try not to do these like massive monster parties. Like for us, we're more interested in having like people convene around a specific topic. So that might be like, where is serverless going right now, or something like that. And it creates a more level playing field, and it creates a type of conversation that we actually want to have with entrepreneurs and with others in the community versus like money is pretty boring, you know?
No, I don't know. No, I'm kidding. I'm kidding. No, but honestly, all the links of all that are all going to be shared in the description notes below. So definitely check those out. And yeah, if you have any events coming up, that's going to be super exciting. If I'm in town, if I'm in San Francisco, the Bay Area, I'll definitely give you a heads up for that then, in that case.
I'll be in New York soon enough. Yeah.
That's always fun. Either way, big thank you on mine. It was an absolute pleasure to have you on the show.
Thank you.
And I will catch you guys on the next one. And that was Dana Oshiro, General Partner at Heavybit. All the links are shared in the description notes below. Go check them out. If you would like to be on Podcast Room by Software Engineer, reach out to us. Just email contact@perrytiu.com. Can't wait to have you on the show. Once again, thank you so much for listening to Podcast Room by Software Engineer. Don't forget to hit the follow button on your podcast app and leave us a review on Spotify and Apple Podcasts. It's completely free. And if you want to tell your friends about Podcast Room by Software Engineer, that's totally cool as well. Anyways, I am Perry Tiu, and I'll catch you on the next one. Big love.